Folks, welcome to Stock Charts Today. This is Bob Desmond over at the Contrarian Trader. It is at current 4:52 in the a.m. Eastern Standard Time, March the 29th, 2018. A little bit of housekeeping. Next week, actually on Saturday, I'm flying down to New Orleans, half vacation, half business. I'll be attending a couple of workshops, seminars down in New Orleans. Anything I learn, I will be sharing with viewers and members alike. I probably won't be doing stock charts today, but I will be putting out some commentary intra-week for the YouTube channel. Members, we should stay on our normal schedule. All right, let's get to yesterday's commentary where I discussed Amazon and the Trump administration. I mentioned yesterday that Amazon, in all probability, at some point in time, become a target of the FTC. So I got a couple of emails after the market had opened asking, was it irony that I brought up the topic? Did I have knowledge of this event unfolding? Or did I simply rob a headline? Folks, normally after this commentary, I go to the gym. I have to go to the gym. It's just my routine. So when I got back in the car heading back to my office, I had Bloomberg on. And I'll tell you, when I heard the news, my jaw hit the floor. And when I did a little bit of further research, I found that Bloomberg sourced the article from Axios.com. The writer was Jonathan Swan. He wrote this article 18 hours ago, posted it 18 hours ago. My commentary listed here came out 21 hours ago. So no, I didn't use Axios' headline. I didn't use Bloomberg's headline. It was, I firmly believe that the Trump administration would take advantage of the weakness in the FANG stocks to take their revenge. It's simply what they do. And frankly, given Bezos being such the enemy of the Trump administration, were I President Trump, I'd have done the same thing. So more irony than anything else. I had no other information other than my own speculation on the topic. Let's take a look at Amazon's stock chart from yesterday. Now, Amazon was down 4.38%, $66.63 on the day yesterday, and they were lower. They bounced back off the lows of the day. I think that this party to the downside is just beginning, but we are a bit oversold relative to its third standard deviation Bollinger Band. In the next day or so, we're going to get a pop higher. I think that pop higher is to be shorted, and we will be looking to lean into the shares of Amazon to the short side in the coming day or so. Now, a far more ominous chart than what is the daily chart is the weekly chart of Amazon. It broke down below critical support this week. And if we close down below it, if we close down below 1498, Amazon, while it still may rally back and try to recapture 1500 next week, I think that it's a dead man walking for the foreseeable future, especially if the S&P 500 breaks down below the February lows. We are rolling over on Stokes, lower highs, and if we close down at these levels or worse on Friday, we will have a lower low on RSI. Not good. These are forward-looking indicators. Money flow as of last Friday's close. There's a delay here on this chart. Money flow was putting in a lower high. You could bet how it's going to look after the close on Friday when they update this. Volume this week, well above average, poised to compete, if not exceed, last week's down volume bar. So we have institutional distribution on Amazon. Now, for those looking for a trade, a very short term, perhaps a day trade, we're consolidating here on this 2-hour chart at 14, what's the low here? 1386 to 1420. I think that we are going to rally, possibly up to fill the gap at 1480. So if you wanted to trade to the long side, here you have it. I think that the rally is going to fade. At a bare minimum, we're going to come back down and retest 1420 to see whether or not this support level here is going to hold. So again, short term, I think that we'll probably get a pop here. I think the pop will fade over the next day or so, and we'll look to short Amazon. Now, switching over to Zero Hedge and their headlines as of late yesterday afternoon, this one really floored me. Susan Rice, former Obama National Security Advisor, joins Netflix Board of Directors. Are they out of their mind? Has Reid Hastings taken a quaalude? This is one of the most polarizing figures of the Obama years. This is the one. This woman who came out 3 different news shows in one Sunday morning, I'll never forget it, and lied to our faces about Benghazi. If this investigation that's occurring in Congress makes its way up to the White House and they find that the Obama administration is in any way involved, you could bet your bottom dollar that Susan Rice, she will be at the forefront of that investigation, along with Valerie Jarrett. And it appears as though Barack Obama, the Michael Myers of presidents, he just won't go away, might be joining Netflix as well, along with Michelle Obama. This is just... Now, I don't know what the deal is over at Netflix, whether or not Reid Hastings is the quintessential liberal, and he's just trying to out-liberal Hollywood. But the last foray into this liberal utopia for Reid didn't work out all that well. You had Chelsea Handler, for which I happen to be a fan. I get a big laugh out of Chelsea Handler, but her show on Netflix, I couldn't watch it. I watched 2 or 3 shows, and it was just propaganda, and it wasn't even funny. So let's take a look at the shares of Netflix, and I think this will be the first time that I'm looking to short a stock based upon, air quotes, stupid. Just stupid. Why would you, with a president that has every right in the world, every reason in the world to be vindictive against Barack Obama and Susan Rice, why would you as a CEO paint a target on your own back and bring these people on board? It makes no sense. It's horrible judgment. And I have to ask myself the question, if they're making idiotic public decisions like this, which puts the company and the shareholder in jeopardy, what else don't we know? So on a weekly basis, Netflix has topped out. Bearish key reversal on the week. We're rolling over on Stokes. Breakdown on RSI, assuming that we close where we're at or lower on the week. Volume above average and down on the week. Daily chart. You can see that we retested yesterday the lows of March. We rebounded. I don't think we're going to hold. I think we're heading lower here on Netflix. Volume yesterday was quite high, the highest down volume bar since the 12th. The last headline on Zero Hedge that caught my eye was a headline called 3 Recent Events That Could Send the U.S. Hurtling Toward World War III. Now, while I don't necessarily disagree with the headline and some of its reasons why we would go to war, I think they're missing the higher level view. We've already gone to war. We are already at war. We just don't know it. It's typical of the United States. I love my country. Don't get me wrong. This is not a bash of my country. But you can go back to pre-World War II, where we were slapping tariffs on the Japanese. At that time, we were an oil exporter, and we sanctioned Japan, put tariffs on them. We wouldn't sell them anymore. I believe it was scrap steel. Because they were at war, we decided we're going to sanction you. And what did they do? They attacked Pearl Harbor. Now, you can go all the way back with the Chinese. They play a long game, a very, very long game. They're very patient and methodical. You can go back to Tiananmen Square. You can go back to when they threatened Taiwan and we sent an aircraft carrier battle group through the Straits of Taiwan. They didn't forget that. We did. So the reasons why Zero Hedge is noting here that we might go to war, trade tariffs, certainly, no doubt about it. The Petro one, out of all of these, the Petro one is probably the biggest, but frankly, I don't think we're going to be able to do anything about it. We're not going to go directly at war with mainland China. Proxy wars in Iran, in the Middle East, in the South China Sea, perhaps. Now, it leads me to conclude that we may have a conflict coming down the horizon is that President Trump signed the other day a $1.3 trillion budget, which was horrible, absolutely horrible. He got nothing of what he wanted except for one thing, the funding of the military. Now, the petro yuan, to me, is actually longer term. Short term is going to be short and intermediate term, it's going to be a pain for the U.S. consumer because it's inflationary. It will devalue the dollar. That means that anything that we import will rise in cost. But let's go back to 1971 when the petrodollar was created. Nixon had just taken us off the gold standard. How is our lifestyle before the petrodollar? Well, most families could survive on one income. A wife, if she chose to, could stay home and spend time with the family. Everybody could retire, go on vacations, and have a reasonable lifestyle. The middle class was far more affluent then than it is now. So did the petrodollar longer term hurt the United States? I would argue that it did. Why? It's because it allowed a spending boom that we're now going to have to unwind. But what it will do is that it will force industry back into the United States to produce here. So longer term, in all probability, it will be good for the dollar because it's going to require us to become more fiscally responsible. Shorter term, though, it's not going to be pretty. And lastly, with regard to the Chinese and the fact that they are already at war, folks, during the Bush the Jr. years, remember they knocked one of our spy planes out of the sky. It was in international waters, but they knocked it out of the sky. They've been stealing our intellectual property for years, and we've allowed it to happen. And lastly, they built the man-made islands, I believe they're called the Spratly Islands, to help defend the South China Sea, which just so happens to be the busiest shipping lanes in the world. And the last reason is kicking out the Russian diplomats. I think that's the lesser of all of them. But it is, during a prelude to war, you usually get a kicking out of the diplomats. But again, we're not going to direct war with the Russians. We might have proxy wars in Iran. I think we'd want to avoid North Korea at all costs. Syria, certainly. Iran. And if the Chinese decide to open up a second front, Taiwan. So in closing, we're already at war, folks. We just don't know it yet. Let's get to some other charts. Okay, let's go take a look at a couple of other member stock chart requests, and then we'll segue into the pre-market activity. Booking Holdings, BKNG, weekly chart. I never heard of this company, but it's a $2,000 stock. We're down on the week 1.5%. We are trading down below critical support. We have bounced off the lows. I wouldn't be a seller of these shares until one of two things occurred. One, we fail to close above this support level here at 2,067.99. Or two, if you want to keep your stop loose, if we make a new weekly low this week or next at $2,020.70, I would look to stop out of the shares. Volume is fairly low. I mean, last week it was low as well. This week it's trending on par. Daily chart. We broke down below support on Tuesday, and we closed there. I think that in all probability, we're going to retest 1,984.94. We may just bounce off of it. So I would wait to see how we close out the day and week before I went selling my shares. And if we rally up and above this upper band of resistance at, let's call it 2075, I would probably hold. And I would look to add to my position if we rally and recapture 2,087.34. Keep an eye on your Stokes here. As I always like to say, when you have both lines on Stokes declining, below 50, rallies fade. So I would not be a buyer of the shares intraday. I would wait to see how they close. Volume yesterday rose to above average, the highest down volume bar since February. Apple, another company, which is not a FANG name, but it's certainly a NASDAQ leader, which is not having a good week in terms of headlines. A new controversy brewing about throttling back of batteries. I have no idea what that's all about, but it's not good. It's negative news. Now we're up on the week. We have an inside week. No new high, no new low. We are off the highs of the week. We're rolling over on Stokes. Lower highs and lower lows on RSI. Volume this week is about on par to come in at average. And we are up. Daily chart. All right, so I think we have lower lows to go here. I think what we saw on Apple was the shares leaning into its third standard deviation Bollinger Band where it's not supposed to be. A rally should have been anticipated, and we did get a rally. On Tuesday, we saw a bearish key reversal day, a follow-through day yesterday, another reversal day, another instance of when rallies fade. 2 days in a row, rallies faded. We're going to roll over here on Stokes. I think we're heading lower on Apple. I would not be a buyer of these shares. Let's get to the pre-market activity. Let's talk first about the U.S. dollar. The dollar had a strong 2-day back-to-back Tuesday and Wednesday rally. No doubt about it. We had GDP numbers which came out better than expected for Q4 2017. But the rally in the dollar began prior to the GDP number. So two things, and I went over this last night with members on Market Wrap. Members, if you haven't taken a look at that commentary, please go check it out. I talk in great deal about the dollar, and 2 points in particular that have me very, very suspect of the rally in the dollar is A, volume, of which there is very little to support this rally. So I believe that what we've seen over the past couple of days after Monday's bloodbath was a short squeeze. We do have inflation data coming out today. We'll see if that influences the dollar at all. The second reason why I'm suspect of the rally in the U.S. dollar is despite the fact that the revised GDP numbers came out better than expected, the yield curve broke down to multi-year lows, lows not seen since 2007. So it leads me to ask the question, what does the currency market get that the bond market doesn't, or is it vice versa? And by the way, has anybody taken a look at the 10-year yield, which at current has broken down to new weekly lows? So the dollar this morning is up. It's holding its gains. But you can see if you drill down here that on this 15-minute chart, let's edit these lines, make them more clear. You can see that overnight, we were in an ascending wedge formation, which is not my favorite continuation breakout pattern. And we broke down below the lower band of support. We are now retesting and trying to recapture that support level. Now, keep in mind, we are using a 15-minute chart right now, very volatile, and certainly nothing that you would want to use as a barometer for whether or not you'd want to open up a swing trade. But we do have strong resistance above. And if we break back down to below 90 on the Dixie, that's a psychological support level, and we may see some program selling of the U.S. dollar. So keep an eye on the dollar. I'm suspect of the rally. Let's pull back to a 4-hour chart. Let's take a look at gold. Gold is consolidating. You could argue that we've broken back above a support level. We haven't closed there yet, so I would not want to make that case. We're still down on the morning about $1.60. So it's, to me, looking weak. Taking a look at natural gas. Nat gas is up this morning. We have the inventory report that comes out, I believe it's 10 or 10:30 Eastern Standard Time on Thursdays. So expect that report. I saw some analysis that there is reason for a nat gas rally in the summer. Now, I haven't gone into great detail on that report and reading it, but there could be some headline news that's supporting this run. I wouldn't be a buyer in advance of the inventory report, though. That could certainly move nat gas. Let's take a look at the NASDAQ. We are up this morning strong. We've been consolidating. We broke out on this 4-hour chart above this upper band of resistance. We do have some overhead supply here at the 65.82 level, and a breakdown below 64.21 and a close there will probably take us down to the February lows. The S&P futures, they are up as well, about 1/3 of a percentage point. They have broken out of this trading range. I think that if we break down below 25.86, which marks the low on the 23rd of March. I think we head down to the February lows. Let's leave things off with Bitcoin, which when I went to bed last night was up on the session. We were holding support. And I warned yesterday that if we break down below this support level here, Bitcoin is going a lot lower. We are currently down 4% on the session. We did break that support level. I would avoid Bitcoin like the plague right now. I think we're going a lot lower. This is a serious breakdown. The next support level on Bitcoin is 7,294. So if you folks that are out there trading these cryptocurrencies, learn the charts. There is far too much media hype with regard to the cryptocurrencies. Learn the charts, please. And that's it for today, folks. Please subscribe to my channel if you watch this on YouTube. Click that bell. Get notified of future videos. Members, I will be in the forum later on this afternoon. Everybody have a profitable trading day. Be well.